In a range-bound market, we're looking at the strongest setups for the best low-risk, high-reward trades. Gary Glover is guiding us through his shortlist this week. That's after we cover the indices of the US and Australia to understand how they're performing along with the blueprint. Good morning, Gary. How's this week going?
Yeah, no, pretty good. The market's had a bit of a bounce last week, so off a bit of a key level, so that's encouraging.
Well, when we look through this week's report that you've put together, it does stand out. We're looking at the NASDAQ chart, and we can see that it did bounce off where you've got sort of that recent high, the previous high, and then quickly reversed around. So how do you interpret what's happening on the NASDAQ now?
So look, we've had a nice bounce there. I noticed the volumes were kind of medium, so not incredibly light, not incredibly heavy. Sort of medium there. So yeah, I mean that we did see a little bit of selling on those on the pullback there, and the volumes are modest there, which is sort of, I guess, kind of aligns with that. Always sort of thinking that sort of July through to October. I look at the sort of third years and also the pre-election years. I saw someone was asking about what cycles I'm referring to. They really should just go back and look at everything from October. We outlay that pretty regularly, but that's a pretty choppy period, and so it does sort of suggest maybe this rally is not getting sort of super strong breadth. Which means maybe we'll just rally up into September, and maybe we'll fade back into October again, which is sort of similar to sort of a lot of those third years, a lot of those pre-election years. So I think it's encouraging here. We're going to move higher here, or maybe we'll move sort of slightly higher there, Chris, and then maybe pull back slightly shallower again. So, but you look, in the short term, looks encouraging there, but the volume's probably just telling us it's not going to be super powerful. But yeah, which makes sense in terms of sort of how, the normal cycles tend to work at this time of year.
Well, you had mentioned in the cycles and the blueprint of what to expect. Normally that's, for those who want to check, late January, early February, you walk through what you're looking for the year. But 8.9% pullback for the NASDAQ was pretty high, pretty large on the pullbacks from what was expected. When we looked at the S&P, you just mapped out sort of 5% is often a pretty large pullback in this part of the cycle. We got 5.9% from the peak. So are you seeing kind of a similar thing for the S&P or a little different?
Yeah, it's okay for the NASDAQ. The NASDAQ sort of tends to sort of outperform both ways, so it'll tend to have a bigger move up and then a bigger pullback. But the S&P, the 5.9 was probably on the larger sort of side there. If I look at the previous 60 years, I think there wasn't too many above 5%. We might have had a couple there, but not many. So I think 5.9 is probably slightly larger there, but yeah, still pretty constructive. And I guess if I measure that against previous pullbacks in the trend, it's almost identical. So that, and if I look back historically, oftentimes we see a bit of uniformity in the pullbacks. They do tend to sort of mimic and follow the previous sort of bull phase and then the same sort of size pullbacks. So I view that as pretty, it's definitely having commonality with previous other periods there. So I don't see anything unusual here so far, apart from that number being paid, say 5.9, the actual trend structure and following other trends in the past, they're almost identical. So probably just the volume. That's probably the thing. There was that you think about that pullback there, the 3 weeks we did, that was the first time the whole year we've actually had heavier than normal selling volumes. That's the first time I've actually seen any real decent selling, which is probably part of the reason why I've been pretty confident about the market rallying this year, because I just haven't seen any selling volume into the market the whole year. So it's taken till August here to see some sellers get active. So, but that might be just be consistent with the period we're in as well, being more of a choppy period here. So yeah.
Okay, so for the Australian market, if we're looking at what's happened here, last week you mentioned this trend line, this grey line, and then if you said it's getting a bit more validity with a few more touches, recent touches, and we've just come down here. and possibly a bounce could come. We did see a bounce. Clearly that's what happened. How are you seeing this on the Aussie market?
Yeah, I mean, I guess we have sort of bounced off the key level, which is pretty important. But probably just as important too is Chris, the volume is pretty strong. So the concern for me was that there was a bit of selling in those 2 weeks into the low. So sometimes that sort of tight week there of the low, that was a small range there of pretty big volume. So that's sort of, in terms of, that would be unusual for Wyckoff, because when you sort of see, like you see a big wide range week up or down, that means that the market's moved through a lot of price levels. So you should see decent sort of size volume. So the first week down definitely saw big volume there. And that was probably that's probably the first negative week for the hour index that I really saw. But then the next week has been a pretty tight week, which is unusual to see big volume there. So is that, I guess that question with last week was, is that big volume, is that accumulation occurring here or is it distribution? That was the sort of concern there with the previous week. But the fact that we bounced off that level now sort of gives me, it does look like that might have been accumulation that week here, because then you can sort of say, hey, we've had 2 pretty much above average weeks here on volume, and definitely bouncing off the last week on good volume is a pretty good sign there. So it's all still pretty tight here, really. If you look at the whole move here, we've sort of gone sideways here for 2.5 years. And if we think about charts and stuff that we talk about all the time, there is, if a stock's just sort of consolidating underneath its old high, that's normally a constructive sign here. So I still think it looks pretty decent here.
Okay, so we can really consolidating under that high, as you said, sort of 2.5 years. The Dow Jones has been a little bit more similar to the ASX over the last couple of years than, say, the S&P and the NASDAQ. How are you reading that for the Dow Jones?
Yeah, key thing now, look, it's probably underperforming the average for this sort of for this cycle, but it's still sort of following the sort of similar path. And look, although it did sort of pull back, it just pulled back to the break zone, and it has bounced sort of from that sort of critical zone there for me. So come back, retest the break zone, which is not, again, pretty common, and then bounced off there. So yeah, definitely want to see a bit more follow through here, but yeah, sort of, again, it's constructive there. Nothing uncommon here so far. So and the only thing uncommon there is probably that it's not more bullish, not moving faster here compared to the sort of previous cycles, but the construction of the trend is quite normal, and it is still pretty constructive.
Okay, so now it's time to move into the trading shares for this week, which you've pulled through. Looking at these charts, there's a bit of a common theme in here, which is the false breaks, whether it's a spring, however people interpret it. Do you just want to give us a quick overview of what that trading strategy is? Because we alluded to at the start, low risk, high reward. How do you look for these trades? Why is it important? And where's the low risk, high return?
Yeah, so we're sort of saying in this, I mean, we've seen it for the last few years here, Chris, like a lot of the big caps. So just look at, CSL, Combank, just look at some of the bigger names there. They've really been trading in ranges up and down. And oftentimes we might go to a slight new high or a slight new low, and that's often reversal points. So it's not as sort of trending. In a trending market, you might go to a new high and then pop through, or declining market, you might actually sort of break to a new low and follow through. But in a range bound market, you're often sort of trading within the band. So I personally like to sort of, we've seen a lot of it is where we break down to a new low and it doesn't follow through. So if you don't sort of follow through on a down break of a low, that's often the point where you'll see a reversal. And you can just go back and look at the top 50 stocks here the last few years. Seen so many false breaks top and bottom there, and then they reverse there, then they turn and they move pretty quickly there. And it's typical of a range bound market here. That's the one that we're actually sort of in here. So I think it's good. I mean, I've sort of looked at the VCPs and other sort of bullish patterns, sort of momentum based patterns, but the false break or the high margin new low, they're good sort of signals in a range bound market. So just a point there. The beauty of that pattern there, Chris, is if you just say with that the ACL has just gone to a marginal new low here and then reversed. If we sort of buy that reversal, our stop is really, at the last low is really close. So we've got a sort of small stop, and if the market bounces back up and retest the previous little swing high, that's a pretty large gain. So from a risk reward point of view, your reward is pretty high as opposed to your risk there. So we don't need to get many of those right for them to pay themselves. But that's just sort of something that's been happening in the market a lot in the last few years. So I think it's a market to be looking at. So yeah, ACL's done it here. I think Aluka, S32. We saw it with Ticker Data made a false break there a couple of weeks back. That was probably second or third one. So we had a couple of failed attempts, but we sort of get it, often like your little spring there. You sort of each one was just sort of slightly marginal. Had a bit of a bounce, but no follow through. But at some point you get the big moves and stuff there. So yeah, just a little bit happening here. So I really, the two sectors I thought were pretty interesting was healthcare and some of the miners there. Some of the miners were already starting to bounce last week and some pretty good volume. So mineral resources, BHP, had pretty good bounces, and they're kind of the leaders. So we look for the leaders first, and then look for the companies that sort of follow those. So it looks pretty interesting.
Well, you mentioned healthcare, and this is something that we talk about sort of off air a fair bit, which is the leading thematics on the ASX, and looking at from a momentum perspective, which ones have the best performances. And it's been interesting that the diagnostic solutions and smaller mid caps, even micro caps, have been having a higher ranking from a momentum perspective, while these large caps, like you're talking about here, the CSLs, the Sonics, have been sort of one of the worst of the reporting season of August this year. So you've got Sonic Healthcare's chart here, which is a large cap Australian healthcare company, clearly not a momentum leader because this chart has been on the nose for the last few months. How are you looking at this chart to see an opportunity for a trade?
Yeah, so Chris, that healthcare is definitely not a leader. It's probably probably a leader on the downside. So if we go look at if we look at who's the strongest sectors and the weakest sectors, healthcare is definitely one of the weakest. But it's been weak for quite a period of time here. So quite a long protracted sort of sell here. But just sort of seeing that sort of signs of a capitulation from some of the sort of heavyweights in that sort of stock. Then some of the CSL has sort of come back down to the bottom of the range as well. So some of the leaders are sort of, I'd say, on their knees a bit here. But so we're looking for signs of those sort of either false breaks or exhaustion, sort of capitulation there. And that Sonic there, just the volume the last 3 weeks has been through the roof. So again, is that, the question there, when you see that elevated volume there, is that sort of a sign of accumulation taking place, or is it distribution? And obviously distribution early rather than late here on the sell there. It's already sort of made its way down here, and all the volume steps in. So to me, it looks like it could be possible accumulation. You want to see some more evidence here. I haven't bought this here. I'm just seeing signs of this, like a lot of these stocks are in capitulation mode, like things like Ramsay Healthcare as well. So sort of signs we're getting pretty close there, kind of nearing a bit of a key low here. But we just want to see change in character. Some of that volume there is sort of some of the early signs we'll often see there. And Sonic's probably held up the best of a lot of the sort of, you look across the sector, it's making a higher low. So if we look at, Ramsay's at a new low, Clinical, ACL's at a new low. I think Helios is sort of near the low. ResMed's gone to a new low here. Fisher Paykel's got a new low. So a lot of those stocks have really been. So Sonic's probably one of the strongest looking healthcare stocks here. That's why I'm sort of keeping an eye on it here, because that's sort of held up the best there. And if that does sort of turn here, I think it'll be one that performs the best, because we know the strongest stocks that are in a decline are the whole lot best. They're usually the sort of top performers there. So that does bode well for Sonic there once we turn here. So we just need to see a bit more evidence that we're going to see a turn here. Well, that's the one I'm probably eyeing off pretty closely at the moment.
Well, if we move out of those larger cap healthcare that have been really hit pretty hard, you've got mineral resources, and you did mention that earlier. They have been sort of early to turn, and they can be somewhat a leader in the space. So they've been coming down, sort of trawling out congestion, a lot of tighter closes, a bit of the coiling that we look for, and then dipping down here. So is this what the FB is? This is kind of a false break, or is that what we're looking at here, June, July period?
Yeah, so the false break was the first one that we had a bit of a bounce from, but then didn't get followed through. That's where I thought the market might have actually bounced from there. That's sort of coming back to the old high in 2022 at the start of the year. Like you can see here, the market's come slightly lower. It's actually gone back to retest the sort of, I think might be the April and June high. So we've sort of gone for another retest of the low here. But what we've sort of seen the last week or two here is actually some pretty good volume. So it's obviously reported there last week. Had a pretty good update there, and we've seen some pretty impulsive and a strong bounce on the stock as well. So that's a good sign for the stock there. And the fact that it sort of found sort of support at an old high as well is also sort of key technical as well. So I think any sort of congestion, any sort of pullback there, this is definitely what I'll be looking at there. So I think it still looks pretty good. Looks pretty decent there.
You mentioned ILU before and saying that setting up for the false break. So what we're doing, trading here very recently after that rapid fall with some decent volume right at the end.
So it's funny. In the past there, Chris, I've seen legs like, you see how impulsive that sell-off is into lows. It's literally gone from 12 down to 8 in about 11 weeks. So in the past, my assumption was that, that's a really aggressive sell-off. Shouldn't be sort of standing in front of that. That's pretty bearish. And in terms of sort of mapping out false breaks and stuff there, that's one that I haven't, in the past, I've actually haven't touched because of the impulse of sell to that low. But I've noticed in the past there, having kept a bit of a library of false breaks here, that some of the best ones do look like this. I think Aristocrat ALL is one that comes to mind there. One I did see and didn't trade, looked pretty similar to this and then reversed. But the thing is, I was seeing that capitulation volume there on the down week, and then look at the reversal on pretty strong volume last week as well. So that is a good sign, seeing that big volume come in there as well. This is sometimes human nature to sort of, to visualize that, say, that looks pretty bearish, looks pretty negative, I shouldn't stand in front of that late train. But having gone back and actually analysed a lot of the false breaks from the past, I know a lot of them actually do look like this, so we can still take this trade here, because I know in the past that a lot of the good ones have actually looked exactly like this. So, but yeah, this one looks pretty encouraging here as well. It's just typically of sort of the current market to come back and, retest the trade. That's a pretty decent decline, 12 down to 8. So, lost a third of its share price. That's a pretty decent. And we can see there are plenty of touches around the $8 mark as well. So, if we can buy sort of near 8 with a stop just under there, pretty tight, So, yeah.
Well, another one on your list is S32, still in the mining space. And you did mention sort of false breaks. This one has come to retest this low in a different way to what we just saw with ILU coming quickly. It's sort of been a bit more protracted. The volume still, look at this tight range here with massive volume. So is that something to look for?
Yes, so all those ones there that sort of have reversed and they've all sort of exhausted on this big volume. So that's what I was saying here last week. Their big volume there. What is a pretty tight range, Chris, as well. So this is sort of like, in terms of Wyckoff theory, this sort of says, hold on, you should be looking at this in detail, because this, normally a big wide range should coming with big round, with a wide range bar. When you see a really tight bar, massive volume there, something strange is occurring. Yes. So this is not normal. So, and that can often be a capitulation as well. This might be the sort of turnaround spot here as well. But the thing I like about this one here, Chris, is again, I think Lucas had a bit of a bounce already. So it's already off, not off to the races there, but in terms of sort of putting our stop in pretty wide in terms of our target. So we've got a bit to risk there. Whereas S32 is pretty close to the low here at the moment. So I've actually sort of added the position, this one here, just because, if I'm wrong here, I'm risking not much, and that's the way I like to trade there. We're not going to be right or wrong all the time. We are going to be right and wrong all the time, but we don't know which ones. We don't know which ones we are. So it's just part of trading there. We're sort of some of the best looking signals, they can fail. Others work out there. So, our job is to sort of follow that process, take trades there. I mean, I don't want to get off topic here, but I see everyone getting upset about John Farnell that he letting his song to the yes, and I'm thinking to myself, it's just that's his view. He's allowed to do what he wants to do. Why we come up and down, and we got bloody Joyce there banking $10 million there from his bonus and selling 18 million of shares at the top of the market, knowing that got all these issues coming here. Why are we getting more upset about that bloke? He's robbed the consumer. Is all the credits. Oh, geez, so that's
absolutely the worst week in a long time for any company. All consolidated on Qantas last week, and you're right. The headlines went to assault.
He's damaged the brand for one thing. He's pocketed a fortune. He's almost insider traded there, and it's put corporate greed before the consumer. I mean, I don't know. Sometimes I wonder what people are looking at there. I mean, they should, if they're a trader, Chris, we're either right or wrong. We find out pretty quickly, and we got to get used to being right or wrong. We can't get emotional about it, So a lot of people could grow personally by trading and learning that we're all going to be right or wrong all the time. There, we can't get emotional about it. That's just life.
It's life. But you're right. And to bring us back in, though, you did have one last chart, one last stock on your weekly report, still in the mining space, not a travel company, not an airline stock, I'm not Qantas, but it is 29 Metals. And similar thing, it's been sort of had a rapid fall before, didn't have massive volume in the return, but it's been drawing out, falling, and then trolling along the bottom here. And then you've got FB right at the end. So is this a false break that we saw in the last few weeks?
Yeah, this is very similar to that sort of part. If anyone knows Wyckoff, that's what do you call it? The accumulation schematic number one, sort of where you sort of, kind of bottom out here, find a bit of a load, bit of exhaustion then sort of rally there, or, call it a attempted rally, and then come back and retest the low and then sort of spring out of there. So this is sort of like like a spring here. False breaks. I think it went a couple cents lower or something there. Now 29 events had its issues there, had, weather events which sort of shut down operations there, had to go and raise capital there to sort of sort that out. So had a pretty traumatic sort of, 12 months there. So everything that could have gone wrong has sort of gone wrong for them. So it's all out in the domain now, Chris. So sometimes when all the bad news is out, equity's been raising it. It's like these equity raises, they always get done at the worst times. History will sort of show, if you take, get involved in those, they're usually pretty close to a lot of the lows and stuff there. I think about AIZ in New Zealand when it raised its money here recently. Now it's sort of finally taken a long time. It's probably one of the longest trades I've been in, actually, but finally starting to get paid here this week here with its it's obviously moving up quite nicely, going to go ex-dividend next few days. So 29 I think it might get good technically signs there, false break, good reversal, strong volume, just the external factors seem to align as well. So I think this one looks quite good. You can recover here.
Well, there's some good trades to take into the week ahead, false breaks to look for, tight stops, fair bit of upside on those. And as you said, we won't get them all right, but if you have some good, strong return, low risk trades, you don't need to get too many right to afford yourself the ones that we got wrong and also still be turning a profit. So that's a good summary of the trades ahead for the week and insights on your blueprint, looking at the cycles. As you mentioned, we have covered it for months or years and years, actually, so you can go back and have a look. And there's a playlist on the right-hand side, which will look at a lot of the cycles and the breakdowns. And you've talked about high inflation periods, highly volatile, other trading strategies, springs, false breaks, and then also when you look at the leading momentum companies on the right-hand side. And I'll finish it up with your Twitter handle or X on the left. At that point, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris. I was going to end with, I had a great quote, actually. I did say I was going to bring up Friday, but I thought I just couldn't help myself. To help ensure success, practice defensive money management. A good trader watches his capital as carefully as a professional scuba diver watches his air supply. That was a good one.
That's the lifeblood of a trader then.
Yes.
Very good. Well, that's a good quote to end on. Thank you, Garrett.
Thanks, Chris.